Many investors are attracted to gold as a store of value, especially during times of inflation and low to negative interest rates. Gold equities are another way to gain exposure to the yellow metal. One of the best ways, we believe, is royalty companies. So, what's a royalty company? A royalty company, sometimes called a streaming company, is a specialized financier for miners that seek help with operating expenses. In return for upfront cash, the royalty company receives one of two different types of payment. It can receive royalties on whatever the project produces, or it can receive rights to a stream. A stream is an agreed-upon amount of gold, silver, or other precious metal at a fixed, lower-than-market price. The financing can come with less restrictive terms than what some lenders offer. This is why many explorers and producers tend to favor working with royalty companies. We believe these partnerships are a win-win. The miner may get reliable, hassle-free funding to cover part of its operating costs, and the streaming company may get all or part of the output at a discounted price. Discounts on metal deliveries can be as much as 75%, according to a 2016 report by Cipher Research. And if the company decides to sell the metal at market price, it gets to pocket the difference. We believe this is a superior business model. Historically, it's helped royalty companies enjoy wide profit margins and free cash flow, allowing them to remain profitable even during gold bear market, according to FactSet data. Royalty companies have a history of rewarding their investors, as they have shown greater dividend growth than the broader S&P 500 index. Between 2013 and 2017, royalty companies, which include Franco-Nevada, Wheaton Precious Metals, Royal Gold, and Osisko, had a combined annual dividend growth rate of 15%. Compare that to 10% growth rate for the S&P 500 and as low as negative 26% for gold miners, as measured by the Philadelphia Stock Exchange Gold and Silver Index. 2017, by the way, marked Franco-Nevada's 10th straight year of dividend increases since the company went public in 2007. You might be wondering, how can some royalty companies afford to be so generous? For one, they're not the ones getting their hands dirty. They're not responsible for building and maintaining a mine's infrastructure. Producers are. And two, they generally don't have a large number of miners and other laborers on their payroll, as producers do. Then there's revenue per employee. With only around 30 employees, Wheaton Precious Metals has one of the highest rates in the world. For the 12-month period as of December 31, 2017, it generated $24 million per employee. Now compare that to a large producer like Newmont, which employs roughly 30,000 people. It generated $678,000 per employee during the same period. Barrick, $748,000 per employee. Don't get us wrong, royalty firms do carry risk, including resource and mineral production risk. But royalty firms that are selective in terms of their investments and that focus on good, quality, high-margin mines are attractive in our view. This is among many of the reasons why we consider Franco-Nevada, Wheaton Precious Metals, and other major royalty names the smart money of the precious metal industry. We believe they're just better allocators of capital. They take on very little debt and deploy cash reserves at the most opportune time. And that's why we gave North American royalty companies a sizable weighting in our U.S. Global Gold and Precious Metal Miners ETF, or GOAU. Right now, GOAU is the only precious metal equities ETF to give such a significant emphasis to the three largest companies engaged in the production of metals through passive means. Such companies represent at least 30% of the fund. We believe this sets the fund apart from other gold-focused funds on the market today. The fund seeks to track the U.S. Global Gold and Precious Metal Miners Index, though it may not invest in every stock that makes up the index. To learn more about GOAU, visit usglobaletfs.com. Please consider carefully a fund's investment objectives, risks, charges, and expenses. For this and other important information, obtain a statutory and summary prospectus by visiting www.usglobaletfs.com. Read it carefully before investing.